Hello investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. If you've been following along with the Market Guys, you have seen the evidence in the weekly market reports with regard to how accurate technical analysis really is. And this is a 1-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And I've left my lines on the chart from last week's report, and as I zoom in here, you'll see that this diagonal line is what I drew from the close last Friday. So last Friday was right here, this big red candle, and I said that we would move lower at the beginning part of the week, which we did. Monday, Tuesday, and Wednesday we went lower, and we moved right to that gap fill support line, which is the horizontal line that I drew here. Again, as I zoom in, take a look at how accurate this is. On Wednesday, we came within pennies of that low, and the second part of my forecast from last week is that we would bounce off of that support level. And here we have a bullish engulfing pattern on Thursday with a higher low today on Friday, and the close right now at the bottom of that candle is exactly on my forecast line to the penny. And it didn't just happen with the Dow. If you look at the spiders, which is the S&P 500 ETF, you can see ticker symbol SPY, you'll see that my forecast was very similar. I said that we would move lower early in the week and we would bounce. Thursday, again, we had a bullish engulfing pattern. And as I zoom in, the end of my forecast right there, see that end of that line right there, is right where the S&P is trading right now to the penny. And when you think that's good, look at the Russell 2000. That's ticker symbol RUT. Same thing. I said we would move lower and bounce, and we did just that. And I kept going. And I do this each and every week, by the way, and I'll show you where to get plugged in. The VIX, which is volatility index for the S&P, which is inversely related to that S&P, I said we would move up, which we did. I said we would fill that gap right there. We did that early on the week, and then we pulled back from the gap fill point. Now, as I forecast using technical analysis, I show people how to do this on their own. You don't have to rely on me to tell you where the markets are going to go. If I am going through the markets right now with a blank screen and I'm removing all these lines, you might say, okay, where are we going from here, AJ? Well, there's still a gap above the market, and although this 20-period moving average, which is represented in the blue line, although that's pointing lower, I think early next week we can wind up going higher to reach that moving average. So here's my forecast for next week, and you can follow along to track the accuracy on your own. I think we're going to move up just like that in an attempt to reach this 20-period moving average. So the end of this diagonal line is where I believe the markets are going to wind up next week. So keep that in place. You can copy the screen, save it, compare it, do what you like. This is the evidence that I put out each and every week. Now for the spiders, I'm going to do the same thing. I'm going to erase all lines, just like that. I'm going to remove the lines, and I'm going to zoom in just a little bit more so you can see how I'm actually doing this. This is a support level down here, and there's still a gap above the market. This pattern, this 2-day pattern, is called a harami. That's a Japanese term that translates to pregnant. It's like a pregnant candle right here. It's a little baby candle, but that's how the Japanese describe that particular candle, and it is bullish. It's almost as bullish as the bullish engulfing pattern that we saw on Thursday. That's part one. Part two, this long shadow under the candle tells us that the buyers are fighting back today. So that is a bullish sign, which leads me to believe that we're going to move higher next week. There's my target. So keep that in place, copy it, compare it to next week and the price action that we see next week, and you'll again have some evidence. Russell 2000, I'm going to go right along here, erase all lines. We already showed you how accurate that was. The Russell 2000 is also pivoting higher, but the resistance point is going to be that moving average. So here's what I think we will see for next week. I think we're going to go up in the Russell 2000, but I think we're going to start to come down and pivot from that point. That could very much act as a role reversal. Now, if these terms are new to you, just go to the Market Guys website and go to the video tab, and I'll show you the video library there in a moment, but you can get all the information you need to learn how to read these charts on your own. Finally, the VIX, Volatility Index for the S&P. I think the VIX is going to continue to move lower, okay? I think it's going to move lower, then I think the VIX is going to bounce. So I'm going to remove this line right here, and I'm going to tell you that the other horizontal lines are going to stay in place. I think we could move up to retest that, but eventually I think we're going to break through that line and go higher, which, remember, with this being a contrarian indicator, if the VIX goes up, the S&P will most likely drop. So I've already discussed that with you in the S&P chart, but this VIX is going to confirm the move for us. Next Monday, we have an open house Q&A. You can simply go to the Market Guys website, scroll down, and you'll see a registration link for that event. Again, it starts 8 p.m. Eastern Time on Monday the 19th. Just click on that. It'll bring you to a simple registration page, and then you'll be able to save your seat. As I mentioned before, if you click on the video tab, that'll bring you to the library where we have what we call market shots available for you. These are very short videos that will explain some of the concepts that we talk about each and every week, including how to manage risk using the 1% rule, how the gap comes into play when we're trading, and also, as I mentioned, the role reversal. Very, very important videos that will help you not only manage risk, but it will help to increase the probability of making money as you invest in the markets. We pride ourselves in providing the world-class education that we do, and we look forward to building a long-lasting relationship with you as we go through the markets together. Have a great weekend. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.